next up from our panel is Rosalyn Wilson from Delcan is going to share a few comments and a few thoughts with us. Thank you.
All right. Thank you. Okay, I was asked to sort of put logistics here in the total economics picture. And so there was a couple of themes that I thought sort of stood out. The first one was talked a little bit about by the governor actually this morning. And with the US DOT's and Congress's focus on freight for the first time ever, this is the best opportunity that the private industry has to make their voice known. Previously, we've not been asked what we want or what we need, and so I encourage all of you to go out and get involved and let people know. The second point, I really don't have to tell you, but this has been the slowest recovery we've ever had from any recession, and we've heard a lot of things between weather and tsunamis and things we're calling 100-year events. Well, I think the recession that we went through is probably a 100-year event as you've watched how we've come out of it or not come out of it. And as a result of the recession, I see two main problems in the industry right now. And one of those is capacity, and the second one is inventory. So for this slide, you can see from this is the CAS Information Systems freight indexes, and I've got down on the bottom of that, they're free and you can subscribe to them. They come out on a monthly basis. But you can see that looking at the one on the right, which is freight shipments, you can see we had a lot of growth coming out of in 2010, but for the last 2 years, we've pretty much followed the same curve. We do pretty good mid-year, back down towards the end of the year, and unfortunately this year we actually started below where we ended, but where we started and ended for the previous year, so we got off to a pretty slow start. One of the questions that I get asked a lot is if you look at the ATA truck data, which I'll show you in the next slide, ATA truck tonnage is going up while number of shipments are going down. I encourage you always, when you're looking at data, dig down a little bit deeper. Try to find out what's causing the trend. Don't just look at the headline. Because what was going on here was we actually had some heavier loadings. We had LTL that were tending to be more, LTL loads were getting to be bigger and heavier. Truckload were still the same way they were, but we started seeing LTL tonnage going up. But then you take a look over at the slide on the left, and that's the actual dollars spent on freight. This data is collected from actual paid way bills by a freight payment company. So you can see we didn't really have much growth. It's been pretty flat, and in fact, if you take a look at the change in the number of shipments, that pretty much explains the change in volume. We've only had one really strong rate increase period. And you know, the way I see it right now, I don't still see a lot of conditions here in the U.S. Or globally that are supporting a big change in these numbers in 2013. So here we're taking a look at the truck tonnage index, and you can see really that rates were flat for most of 2011 except in December. Same thing in 2012. The numbers, I actually have the preliminary numbers in here. I know that the December number was lowered a little bit, but I didn't get the new number and go back and change it. They haven't put out a revision to January yet. But if you're looking at 2012, tonnage was up only 2.3%. Let's jump over and look at rail car loadings. Rail car loadings were actually down 3.1%. Intermodal was up 3.2%. It was the second highest year ever for intermodal, but still it was only up 3.2%, and it's 0.1% lower than the previous high, which was in 2006. So again, dig a little bit deeper down into the numbers. Don't just look at the headlines. So I forgot to switch that, sorry. So capacity is one of the things that I think is really big in the industry, and I've actually been saying this now for about 2 years because I kept hoping we were going to take off. But basically it's kind of like the Goldilocks story. You know, she ate the porridge, one was too hot, one was too cold, one was just right. So if you take a look at the ocean carrier industry, that's in the too big category. They doubled their capacity during the recession while volumes were falling off. Since about 2009, they've been increasing their capacity at a rate of about 10% a year. Last year, it fell to 4%. I did actually read an article this morning that some more ordered ships have been, ship orders have been canceled, which I think is a really good idea, because I think one of the other things that's going to impact the ocean carrier industry, even as we do recover, is there's a lot of companies that are looking at near sourcing. They're not going to move the factories that they have in Asia or other parts around the world, but the middle class or consumers are growing in those areas. They're going to use those factories to service those areas and build new factories closer to service this part of the world. And so you're not going to need as much ocean shipping. So I think that part of the industry is going to continue to be in trouble. If you look over at the two small chair, I have truck and air. Well, I learned something this morning, or in the food sector. I've been looking at the capacity of cargo airlines and the number of those that have been scrapped and the total number. What I didn't take into consideration, and Ray Curtis from Delta told us during the food session, is he believes they're actually in an overcapacity situation because of the increasing amount of cargo space in the belly of passenger aircraft. And so that's one of those things where I'm telling you guys to dig deeper. Clearly, I didn't do my homework and dig deeper when I learned that this morning. So, and in the just right are the railroads. They continued on their aggressive capital investment plan throughout the entire, all Class 1 railroads throughout the entire recession. They've currently, still got about 18% of their equipment that is on sidetracks and not being used, but they double-tracked, they built new facilities, they removed some of the bottlenecks. Right now, we've got very aggressive programs going on in the East Coast to remove impediments to double stacking, so that's going to be an automatic increase in capacity when we can double stack up and down the East Coast. So, and of course, intermodal, you've heard from everybody. Intermodal is the fastest growing piece of our fastest growing mode, and you're going to continue to see that happen. One of the things that we've seen happen during the recession is the length of haul for trucks has fallen dramatically, but the length of haul for railroads has fallen somewhat also, because we're starting to have shorter distances that are being used for intermodal. If you can get to the intermodal ramps, you can use intermodal. So we're seeing more of that growing. One of the previous speakers talked about the driver shortage. I agree with the fact that we've got a driver shortage. I think there's a couple of things that may make the estimated number of 220, 230 a little high in my estimation. And part of that has to do with the dynamic, the way that the trucking industry is changing. As we go to more and more intermodal, fewer truck driving jobs are actually long-haul truck driving jobs. More of them are becoming regional and more localized, which is really what the problem that the industry has is we're not attracting younger people to the industry. And that's because they've grown up with parents at their soccer games. They don't want the jobs where they're going to be gone for days at a time. So we haven't made pay isn't as much, I think, as we haven't made the job attractive. So, so what you see here is the fact that we've had a decrease in our number of Class 8 trucks, and that goes to kind of the capacity question. During the recession, the trucking industry contracted by about 16 to 19%. And those are trucks that are gone. They're just not parked somewhere where we put a driver in them, turn them on. They were sold in overseas markets or whatever. Sales of heavy trucks have not kept pace with what is our normal repair cycle. The age of the fleet is getting older, so we're holding our equipment longer and we're not purchasing it. We're not purchasing new. The problem that I see with that part of the industry right now is the trucking industry is 95 to 97% utilized right now. So it's not going to take much of a bump, much of an increase in volume before we start to see problems with getting truck capacity, and we're not going to be able to build that capacity back up fast enough. There's abundant credit in the market right now, but it's very difficult for, other than trucking companies that have their own capital, it's very difficult to get the credit, because if you take a look at the volume projections right now, or the volume projections for the last couple of years, they've been pretty bleak. So folks who are holding the money for investment don't really look at it as a really good place to invest their money at the moment. So the other thing that I said was a problem was business inventories. This slide right here shows you that total business inventories are now actually higher than they were before the highest point before we did the drawdown in 2010. And that concerns me a little bit when we see very sluggish retail sales. We had some pretty good manufacturing flows going. That slowed down, that contracted. It's picked up a little bit. But we're not seeing the backlogs growing. Backlogs of orders are still shrinking. Last month, we did finally start to see an increase in new orders in the ISM manufacturing indexes here. But I also go and I look abroad where we're sourcing materials, and China's backlog has cut almost in half in the last 3 years, backlog of orders, and their new orders, they haven't had rising new orders for about 8 months now. So we're not placing orders. And so that concerns me that we've still got inventory rising when we're not seeing inventories. If you take a look at imports last year, they weren't that healthy. I mean, they were up, but they weren't up that much. And the other point I wanted to make here is looking at the things that make for a stronger economy. Ironically, the higher GDP is, the higher inventories are, that's a plus for GDP. I'm not certain that's a plus for the health of our economy. So when I say dig deeper, here's what's underneath those numbers. There's the retail, the wholesale, and the manufacturing inventory. And what we hear about all the time are retail inventories and the retail sales to inventory ratio, which have all looked pretty great since 2010, actually. But what's happened, and this actually started happening prior to the recession, about 4 or 5 years before the recession, I started talking about retailers, and Walmart led the way in this, pushing their inventory back down the chain, back on their wholesalers and their manufacturers. And they continued to do that. And in this data has been collected since 1947. Wholesale inventories have always been well below retail inventories. In 2008, they crossed over, and pretty much they haven't looked back. And so yes, the retail inventory looks pretty good, and looks like they've got it all figured out, but clearly they're not communicating that to their wholesalers and their manufacturers, because you see their inventories continuing to climb. So what I am known for is I am the author of the State of Logistics report that's put out by the Council of Supply Chain Management Professionals. And I told Paige I always hate being invited this time of year because the new data comes out in June, and I'm just now starting to really be able to get some of the final 2012 numbers. So I really don't have any good solid numbers to give you. Plus, if I gave them out before the press conference, CSCMP wouldn't be happy. But what I decided to do was give you some indication of kind of what I thought was happening. And so that's broken out into carrying costs, and interest went down again, but because the inventory is up, all the other lines that you see in there, the warehousing and the obsolescence and the insurance and all that, all of those costs will go up. So I think that segment's going to go up. As far as all of the transportation costs go, there have been the modest increase in volume and very, very modest increases in rates, but the trucking piece is still going to go up. Railroads have been a little more successful in raising their rates, and I think it's going to be intermodal is going to carry them. So if you look at the carload business, that's probably going to be close to a wash between the rate increases and the loss in volume, which is largely coal, which and in some cases has been replenished by the oil shale shipments. But by and large, I think rail's going to go up. I think water shipment, which is inland waterways and coastwise type traffic to Hawaii or Puerto Rico, I think that's actually going to go down because we've seen a significant drop in ton miles there. Oil pipelines, I think, are going to go up. And part of that has to do with it's still a regulated industry, and it has a FERC determines its rates, and it puts out advance, and there's a rate increase in there. I think volumes are down just a little bit, but really mostly flat, but I think it's going to go up because rates go up. The air data, didn't have enough of it in to take a look at. I've seen some really low volumes early on in the year, picked up a little bit more in the end of the year, but I haven't gotten all the revenues in. Forwarders always seem to do well. That's the 3PL industry, that whole transportation intermediary type piece. They usually do better in times when things are sort of conflicted because a lot of them don't have assets they have to worry about utilization rates on. So I believe that the index will go up. We all know GDP didn't go up by much, so it's going to kind of be a wash whether we go up or down with logistics as % of the GDP. And just looking forward, there have been a lot of really positive headlines that have come out very recently in the last week or so. But if you take a look, there have been just as many that have come out that don't look so good. And some of them, when you take a look at them as a measure, think about what it means to the logistics industry. Does it mean we're actually going to move more things? And imports being up is bad for GDP. Exports being up is good for GDP. If they both go down, it's less that we're moving, but it does impact GDP in different ways. So try not to just look at the top numbers. Jump down one more and look at the pieces that actually affect our industry. I think that's the best advice I have.
Good, thank you, Rob.